Rob Carnell, Chief International Economist at ING. Rob, good to see you. Before we just take a look at the US jobs situation, I want to ask you about and get your reaction to that downgrade by the number of UK banks. What do you make of that Moodys decision that came out just minutes ago?
Well, to be honest, I don't usually take too much stock of what the ratings agencies are doing. I think typically they're telling us stuff that we already know. I don't think this has really added to the sum of human knowledge about the banking sector. We've known it's had problems for some time, and the ratings agencies tend to act in a sort of somewhat piecemeal fashion, country by country. It's our turn for a downgrade this time, and Portugal, probably won't be too long before somebody else gets it in the neck. Now,
stimulating growth, creating jobs, that's the focus, whether it's in Berlin or Brussels, in London or Washington. In the past 24 hours, are you convinced that the strategies that we've seen and have been announced are the right strategies to do that, boosting growth and getting that unemployment rate down?
Well, it's a pretty tough act to try and achieve, actually, getting jobs when all you've really got is a bit of quantitative easing to play with. There's no fiscal policy that you can target at job creation, so all you can do is print lots of money and hope for the best. We know from experience that monetary policy isn't a particularly good tool for addressing, short-term or especially long-term unemployment.
Especially when the Fed consistently highlighted the fact that QE2 was less effective than QE1.
Yeah, which means that if they do QE3, which we do expect, they're probably going to have to do way more than the $600 billion that QE2 came. So start the bidding at $1 trillion and see what it does.
How effective do you think the ECB's decision to resume the covered bond purchases is, to extend that line of credit to the region's banks? How much time does that buy the banks before we actually get a decisive news on whether the banks will be recapitalised?
Well, recapitalisation is part of the big plan, I think. I think it's realised now what the Eurozone needs to do. It does need to recognise the insolvency of certain states and address, in particular Greece, the debt problems there. It's not going to make it with its current debt stock. There has to be a major restructuring there. In order to get through that, there has to be recapitalisation of banks, and there also has to be a ring-fencing mechanism through some form of EFSF, leveraging up to prevent this from spilling over into contagion. So it's all part and parcel of a big approach to this. And the ECB's moves yesterday, while not going quite far enough, we'd like to see some rate cuts, certainly go in the right direction.
And the recapitalisation, the money will come from where? The EFSF?
Well, good question. I think that's being argued about at the moment. You ask different member states, they'll tell you different things.
Yeah.
Possibly from the EFSF, but there's a strong call for member states to provide money where they've got it in the first place.
Let's just turn back now to the United States, because we are waiting for the non-farms later on this afternoon. Do you have faith in Obama's job plan? Do you think it really can create 1.8 million jobs? No, I think that was a ludicrous suggestion. I think politicians are always very keen to try and up the scope of their intervention. I think there's very little chance it would have created anything like that. But the main problem with it is, I think, even from the offset, it was very unlikely to get the bipartisan support it needed to get through. And in the end, it may end up, even if the intention was good, being nothing more than a political stunt. And what about Bernanke and the Fed, about the extra measures that he's actually said that he is able to take? Might that also help stimulate the economy and do what Obama desperately needs if he's going to be re-elected next year?
Bernanke has said in the past that the Fed can't do it on their own, and that he's almost cried out for some help from the administration. It doesn't look as if we're going to get that. The Fed's cupboard is looking increasingly bare. There are various forms of QE, various new twists on twists of QE that you can implement. But at the end of the day, they haven't got much left.
OK, we shall see what happens. Rob Carnell, Chief International Economist at ING, thank you very much indeed.